Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group with the first market update for 2025. For those of you new to the channel, we are a national buyer's agency with offices in Sydney, Melbourne, Brisbane, Adelaide and Perth. We believe that there's always an opportunity somewhere. We help you to be a player and not a spectator in your wealth journey, focusing on quality properties over quantity. Operating through 3 decades, our experience will ensure no sleepless nights worrying about property markets. On this channel, we talk about all things property, but most importantly, I read the news and separate the fact from the fiction so you don't have to. Unfortunately, my camera's not working today, but you all can see how handsome I am, that guy in the middle, so don't worry about that. We're thrilled to share some really exciting news with you. Providence Property, your trusted partner in property investments since 2006, has undergone a major transformation. So just like a well-executed property renovation, we've refreshed our brand to ensure we continue to deliver the best experience for you, our loyal clients. Same team, same dedication, just a fresh perspective. So over the past 3 decades, we've built a solid foundation of trust and expertise as one of Australia's premier national buyers agencies. Together, we have purchased over 3,000 properties valued at over $3 billion. Much like upgrading a property to maximize its value, we've enhanced our brand to better reflect who we are today and the future we envisage for you, our valued clients. Please visit the brand new Providence Property website featuring over 50 blog articles which are great educational resources. That's live now. We're also honoured to be announced as a finalist for this year, 2025 Small Business Champion Award for the second time. And we appreciate all of our clients and business partners who work with us for a better future. Now, let's look into the speed check. With our rolling 12-month movement, I've done the numbers from the 31st December 2024 to the 2023 to the 31st of December 2024. So that's one whole basically calendar year. And what we can see there is $170,000 increase in Perth. Currently, that's around $3,300 per week increase in value. Yes, it's slowing down a little bit slower than what it was the month before. Basically, every single capital city that you can see on there is slower than what it was the month before. Let's then move to second place, which is Adelaide, up $114,000 for the year, or $2,200 per week. Brisbane, $107,000 for the year, $2,100 per week. Sydney, up $40,000 for the year, which was $800 per week. And Melbourne, obviously the worst performer in Australia at the moment, negative numbers, down $18,000 for the year, or $350 per week. Okay, let's look at the Hedonic Home Value Index. So what we can see here is we can see first Adelaide, the best performer for the month, up 0.7%, followed closely by Perth at 0.4 and then Brisbane at 0.3. But for the year, you can see under that annual column there in the middle, Perth was the best performer. Now that is from February, so this would have been data from January to January as an annual bit of information. So it's not exactly the calendar year, but it's January to January. And this shows Perth was up 17.1%. Followed by Adelaide at 12.7 and then Brisbane at 10.4. All three of which absolutely smashed that combined capitals number that you can see at the bottom there highlighted in green. The average combined capital city performed at about 3.8% for the year. In the yearly battle of the capital cities, the winner for 2024 is Perth. Perth had a 324% increase above the average increase seen across the combined capitals. We've been so pleased with the results that we've gotten for our clients in Perth over the last 4 years. Obviously, we've been buying in other capital cities as well, but the data just showed that Perth had the most fuel in the engine, basically, in the tank to push. And we had a 77% increase in value since COVID. That's the highest increase of all the major capital cities also during that time. So it's not just for the year, it's basically for the past 5 years it's been the best performer as well. During the 2024 year, Perth increased by 19.1% or $155,000. That was first place. Second place was Adelaide at 13.1% or $107,000. And then Brisbane closely following Adelaide, up 11.2% or $100,000. For some long-term perspective, and I'm all about the long term, let's review the change in dwelling values over some key time periods according to CoreLogic. And I want to focus on the top 5 populated capital cities. So that's Sydney, Melbourne, Brisbane, Adelaide, Perth. And the reason why, typically we don't look too much at places like Darwin, Hobart, Canberra, just because their population growth doesn't have the catalyst that the other main capital cities do. To be fair, Adelaide doesn't actually have that same catalyst either, but we're bringing it in there because the performance has been quite good. So let's have a quick look here, starting off with Sydney, currently down 1.7% from the peak of the market, which was back in September 2024 last year, so not that far away. Over the past 10 years, it's gone up 68.6%. So if you compare that to the combined capitals, it's just above the average 65.7%. Based on this performance over the onset of COVID, if we look at that time as well, so 5 years, it's done 27.3%, which is actually below or underperformed from the average 33.3%. Then we've got Melbourne. Melbourne is an interesting story because the market is currently 6.9% below the peak, which was back in March 2022. And I've said this so many times, clients are always telling me they wish they had a time machine, they wish they could have gone and bought when things were cheaper. Melbourne is giving you that opportunity now. And that's what you should be looking at. Obviously, there's some places you need to be cautious about and you can't just rush in there. Time is on your side, but what I'm saying is you should be taking advantage of that. Absolutely. Melbourne was only up 47.5% over the last 10 years, which is the second best performer after Darwin, which was down 2.9%. So obviously a big difference between the two, but still a city that's voted one of the best international cities on the planet many, many years in a row, that has one of the highest amounts of international student numbers in Australia, which is going to have the largest population numbers in Australia, which has, I think, 8 out of the top 10 companies in Australia are based in Melbourne. It's got a lot of data that's going for it. Yes, you can think about all the negative stuff that you hear in the news, but I'm telling you, mark my words, Melbourne's going to be the best performer in Australia over the next 10 years. Absolutely. 7.8% since COVID. The worst performer out of every capital city there. 7.8% is Melbourne. Next, let's move on to Brisbane, Adelaide and Perth, all currently at their peak. But I've said this before, it's been saying that now for over 2 years. So I'm not worried that this means that there's a crash coming or they're going to fall back. 10 years for Brisbane at 90.8%. Adelaide actually beating Brizzy at 93.4%. And then Perth at 55%. So when I see Perth and Melbourne at 55, 47.5%, and I look at the average across the combined capitals at 65.7%, I think there's some legs left here, guys. Definitely with Perth. I don't think Perth's going to fall over. I don't think we're going to see a crash. Yes, we'll end up going sideways sooner or later. But with the reduction in interest rates that we've seen with the first cut just yesterday, I can only assume that people's rental position in Perth is going to look more attractive as a landlord. You're going to be able to hold on to this asset for longer. It is the only state government in Australia that has a surplus in regards to its budget, its state budget. Perth's not crashing, so don't stress about that. But definitely there are lots of different places for opportunity. I thought I'd break it up a little bit and we'd have some fun and look at the top 10 sales across the nation for 2024. Now, these numbers are actually quite eye-watering, and if you do have some time, freeze the video when you get a chance, Google some of these addresses, look up their realestate.com listings, and just get a bit of insight into how the rich and famous obviously live. Because the most expensive property is this one here, which was in Point Piper, and it was an 8-bedroom, 6-bathroom, 4-car mansion overlooking the harbour, and it sold for $51.5 million, which is, again, just quite unfathomable. But dwarfing that is a recent Toorak mansion sale that happened just last month for over $130 million. They don't have the exact number, but it's claimed to be between $130 and $150 million. And this has now taken the top spot as the most expensive house ever sold on record in Australia. So I know Melbourne's having some rough times at the moment, but there's money there, absolutely. If we look at the market in general, overall, residential real estate definitely still underpins Australia's wealth. We currently have a valuation of $11.1 trillion in residential real estate. That is more combined than superannuation, Australian listed stocks, and commercial real estate. So resi is just where it's at. Total listing levels have remained fairly subdued through the start of the year, with the count on national listings roughly in line with this time last year and about 12.8% below the previous 5-year average. New listing activities across the capitals and the rest of state regions was relatively mild over the 4 weeks to the 2nd of February. Relative to last year, Canberra was actually the only capital city to see an increase compared to 2024, but that's only up by 0.2%, so nothing to write home about. But Adelaide and Hobart saw new listing levels more than minus 10% this time last year. So Adelaide lost 13.4% and Hobart at 10%. Over the calendar year of 2024, just over 170,000 new dwellings were approved. Although 3.9% up compared to 2023, 2024 approval levels were 16.7% below the decade average. And surprise, surprise, 40.6% below the 240,000 a year needed to meet the government's 5-year target. And I did a video on this last year and even the year before that there was no way they were ever getting to that target, and it looks like the data is just proving that. The gross rental yield for dwellings across the combined capital cities is holding at 3.5%. Why is this important to know? If you're an investor like the majority of our clients, rental income is obviously shielding you for some of the holding costs of that asset over time. The longer you can hold the asset for, the more exposure you have to capital growth, and capital growth is typically the goal for the majority of the clients we deal with. What I've done to try to make this a little bit easier to understand is I've taken the data from the median dwelling value across the combined capitals, the median rental yield, and I've put that together. So basically, if you want to pause this and read through my calculations, you'll see that the average property with a 0% deposit, so full equity redraw, is negatively geared by about $27,000 per year, which is about $517 per week. And that's without me including things like strata, insurance, maintenance, etc., other costs. Let's quickly talk about interest rates before we wrap this up. At their meeting yesterday, the RBA announced a 0.25% rate cut. That's the first drop since November 2020. And this brings the official cash rate down from 4.35% to 4.1%. And the decision was due to moderating inflation, subdued economic growth, and easing wage pressures. But the RBA remains very cautious about future rate cuts. The news basically is that for a borrower with a $1 million home loan, the cash rate cut is expected to save them about $153 per month. Yippity-doo-dah. One would definitely hope that the generous people at CBA who just announced a $5.13 billion profit, will be passing on the full rate cuts that economists are expecting to happen this year. And I'm hoping the other banks follow suit because they've been making a lot of money off us for quite a few years now. Today I want to look at recent purchases, and in today's video I've chosen one property from each of our top 4 major capital cities. Let's start with Sydney. My superstar Joey got this fantastic house for some happy investors in one of the best suburbs, in my opinion, in the inner west. It's a 3-bedroom house, newly built in 2023 in a great location. Stunning and practical designed interior drenched in natural light. The floor plan is also very practical. Lovely outdoor low maintenance area with trees and synthetic grass. It is 7 kilometres west of Sydney CBD We got this for $2,550,000. The rental is about $1,700 per week or a 3.4% rental yield. Why do we love this purchase? I believe this is going to become the owner-occupier for this client sooner or later. It's thoughtfully designed and practical, spacious, light-filled. The interiors are high-quality finishes all throughout. Beautiful open-plan living and dining areas that connect to an all-weather entertainment deck. A designer kitchen with Miele appliances, bespoke joineries, polished concrete floors. I love polished concrete floors in houses. I think they just set them off a bit more. They've also got underfloor heating in the concrete, which I think is pretty amazing, and a large basement area that spans the entire footprint of the property itself. So a real luxury style product here. We found this hidden 1980s solid built gem on a 650 square meter block just over 10 kilometers from Melbourne CBD. And this was my boy Ben. He did such a great job here. Hardwood floors painted with new ceiling fans, renovated washrooms. You can see they've done a great job with their renovations here as well. Spacious internals with high ceilings, natural light, and basically the distance from the CBD here is only 10 k's northwest of Melbourne. We got this for $1.53 million. Rental estimate is $950 per week, or possibly a little bit more, but I'm trying to be conservative. That's a 3.2% rental yield. Why do we love this purchase? Above average land size for the area at below average price for the area. Property has been updated inside. It has a pool and is 4 bedrooms. Next door, that block, the same size, has already been subdivided into 3 lots. So there's great opportunity here for our client to potentially do some development later on. Let's look at Perth now. This home is in a prime location, only 1.5 kilometers from Perth CBD, in a boutique estate of only 6 modern townhouses. And since its construction in 2005, which isn't brand new, it has also been renovated since then, and has the essential ingredients that every semi-detached dwelling needs, which is sunlight. This thing is drenched in sunlight, lots of natural light. Washrooms have been fully updated. Bedrooms have ducted air conditioning and new carpets, painted, beautiful. The size of the block is 193 squares, which is big for a townhouse. The outdoor entertainment area is decked, private, and requires minimal maintenance. Looking at this property, it's 1.5 k's from the CBD, as I said, west. $960,000 was the purchase price. Rental estimates $950 per week, or a 5.14% rental yield. I mean, imagine getting something 1.5 kilometers from Sydney, from Melbourne, a townhouse, something on nearly 200 square meters like this. I mean, you're going to be paying easily $4 million plus. This is $960,000. Plus, for that $4 million that you buy in Sydney and Melbourne, I guarantee you, you're not getting a 5.14% rental yield. No, sir. So why do we love this purchase? Boutique, solid build, superior layout, fantastic location, 15-minute walk to amenities, including a major shopping centre, giving this a walkability score of 87. It's actually the 5th most walkable neighbourhood in the whole of Perth. Our team in Brisbane, I think it was Christian that got this one for us. This young and tidy 2-story, 4-bedroom home on a 320 square metre block in a quiet street, 25 kilometres north of Brisbane CBD. So there's a beautiful property, nice open plan living and dining area with ducted aircon, pendant lights, like very beautiful. Large bedrooms, lots of natural light, low maintenance backyard with spacious outdoor and undercover entertainment area with barbecue pit. Distance from CBD, it's 25 k's north. We got it for $865,000, but the property is currently valuing on our system for over $900. So we're very happy with the purchase price. Rental estimate, $650 a week, or 3.7% rental yield. Why do we love this purchase? Young house, it was built in 2015, low maintenance, modern interiors with large bedrooms, close to a major shopping centre and public transport, including a train line. Thank you so much for your time. Remember, we can't help you until you commit, and once you commit, we won't let you fail. We are bringing 2 things together here, your desire to build wealth and our nearly 20 years of experience buying property. For more than 3 decades, Providence has helped Australians open a life of opportunity through real estate, giving them the future that they want. We buy unique, quality assets in areas where demand outpaces supply. We focus on properties that appeal to much larger markets of owner-occupiers, which is about 70% of buyers, not that 30% of investors. And we buy in the right capital cities at the right time, guided by economic property cycles. If you want proof, go through our couple hundred videos as the cycles changed and we've recommended different locations. We buy the property which is uniquely suited to your situation, which will act as a springboard to the next wealth building stage. This is how top performing investors build wealth, and this is how we want to work with you. Thank you for your time today. I will see you next month.